The following information regarding the cash transactions for Louis Koen traders was available for the month ended 31 July 2020. Good. They give us opening balances as at the 1st of July. The bank overdraft was 58,000 Rand, therefore a negative sign, and the cash book balance was a positive balance of 3081.56. Then we had cash receipts for the month of 25,000. We had cash payments for the month of 10,000 Rand, and we had cash deposits for the month of 13,694. Now look at this. This is very important that you actually realize that cash receipts for the month was physical cash, and out of that cash they had certain payments. So they received 25,000 Rand worth of cash. They paid out of that cash 10,000 Rand. Then 13,000 Rand out of the amount that they've received, they actually banked. Now, what will appear in our bank account with Absa, Standard Bank, wherever the bank account is? Only the amounts deposited during the month. The cash receipts and the cash payments will be recorded in a separate account, a cash account. But in my bank account, that will be the physical amounts that we've deposited into the bank and the physical amounts that we have paid out of our bank account, like checks. Then they tell us that the following entries from the cash book did not appear on the bank statement. And the following transactions on the bank statement did not appear on the cash book. Now, for these transactions, remember what they've done is they've already done the reconciliation here. They've already compared the bank statement with a bank account in the ledger. And they just made a summary of their findings for you, which you have to do something further with. Okay, then they say, what are we going to do with these items that appear on the bank statement and not in the cash book? We must actually go and check whether those items are for our account. If it is for our account, we have to rectify our bank account so that we actually record these items in our bank account. Then they say the balance according to the bank statement at 31 July was 11,828.95. Number one, they want you to calculate the cash book balance, they want you to calculate the cash on hand, and they want you to do the bank reconciliation. Oops, it's not 0.63. Point 3, prepare the bank reconciliation for the month of July. Good, let's start then. Let's go and calculate first what was our cash on hand as at 31 July. That is something separate from our cash book balance. Our cash book balance will be our bank account in the ledger. Okay, now they tell you, assume there was no opening balance of cash on hand. So our cash on hand would have been the amounts that we've received in cash, less the amounts that we've paid out in cash, less the amounts that we have deposited for the month in cash. Because that is also, we received some cash, we paid some cash, and whatever we retained during the month, that we've actually deposited into the bank account. So that reduced our cash amount on hand. Cash receipts, less cash payments, less cash to the amounts deposited means that at the end of the month, we should have 534 Rand worth of cash in the entity. The second thing is we have to calculate the cash book balance. Now, the cash book starts off with a balance of 3081.56. So if we want to calculate our cash book balance, we'll start. You can do this in a T account format as well. I've just done it, I say calculate, so I've done it in a calculation format, but a T account is 100% fine. I start off with an opening balance of 3081.56. And then obviously the amounts that was deposited into my bank account for the month, I have to account for that in my bank account because that went through my actual bank account, my standard bank account, 13,694. So that increased our balance in the ledger, 13,694. Then we have to move down here, the following information on the bank statement, which is not yet in the bank account. Oh, here, check payments. We forgot about that one. Check payments for the month 4089, so obviously that went through our cash book, so we have to account for that as well. Check payments 4089, that would reduce at the end of the day our balance. Good. Then we're done at the bank statement. The check received from a debtor marked RD. So the check, there was not sufficient funds in the bank account of the debtor, therefore it didn't go through his bank account. When we deposited that check initially, we debited our bank account, so it increased our bank account. We recorded it as a receipt, but that receipt never realized. So now we have to take it out of our bank account. So we're going to credit our bank account with a 52146 RD check, and we're going to debit the debtor's account once more with that amount. Bank charges, it's an actual charge. We only know what that charges is once we receive the bank statement, so now we can actually record the bank charges. It's an expense, it's a payment, so it will reduce our ledger account balance, our bank account balance of R72.15. Interest on an overdraft, well, that means it's interest that we've paid of R450. We also only know about what that interest amount is once we received our bank statement. So we must now record that interest in our books, and that will also reduce our bank account balance in the ledger with R450. Bills receivable recovered by the bank on behalf of Louis Koen. So the bank actually collected those monies. So they paid it into our bank account, R485. So that will increase our bank account with R485. And simultaneously, the bills paid by the bank on behalf of Louis Koen, R265. That will reduce our bank account balance to R265. So the total amounts of payments that we still have to offset against our opening balance is 5397, and the total amounts of receipts that we still have to account for against our opening balance is 14,000. So that means then at the end of the day, we're going to end up with a balance according to the ledger, the bank account in the ledger of 11,863.52. So let's start then our bank reconciliation statement with the 11,863.52. Credit balance, this is a debit balance, sorry. I just want to show you both. Debit balance as per the bank account in the general ledger, that is 11,863.52. Now, items which is in the cash book that does not appear on the bank statement. Is it right that we've recorded these checks in our cash book? Yes, it is. Why? Because if we have already issued those checks, so we have to account for those checks. So check number 1038, 1043, and 1048, that is correct. It's already in our bank account, but it does not appear on the bank statement. Now, if I start with my bank account balance in the general ledger, as we did, 11,863.52, and we're going to work towards the bank statement balance. What did those checks done to my balance in the ledger? It was a payment, so it actually reduced our balance, our bank account balance as in the ledger. So if we want to eliminate that, we have to add it back to that balance in order to make that balance the same as the bank statement balance. So we're going to add these three outstanding checks, in total 51343, to eliminate the impact that those checks had on my general ledger account balance. Remember, I have two things that should be the same in an ideal world. Our ledger account balance should be exactly equal to our bank statement account. For some reason, the two are not the same. And the purpose of the bank reconciliation statement is to put on a piece of paper why that balance and that balance differs from each other. I want to explain the difference between those two balances. All right, then we also had interest in the cash book that does not appear on the bank statement, a deposit at the end of the month of 548 rand. So when we posted that deposit in our cash book, what did it do to our cash book balance? It's a deposit, a receipt, so it would have increased our ledger account balance. Now, if we want to eliminate that, what do we have to do? We have to take it out, so we're going to decrease our ledger account balance again to eliminate the impact of that outstanding deposit. And once we've done that, we do a simple computation. 11,863 minus 548 plus 513 brings us back to a balance according to the bank statement of 11,828.95, and that is actually the actual balance according to the bank statement. We could have started our bank reconciliation statement with our bank balance as per the bank statement. Let's have a look at that. If we did start it with our bank statement balance, there's a mistake, our balance was 11,828.95. We could have worked from the bank statement balance to the ledger balance, exactly in the same fashion. If we started with a bank statement balance, then we would have argued, what will an outstanding deposit do to our bank statement balance? So our physical account with Standard Bank, what will happen when a deposit is being reflected on the bank statement? It will increase our balance with Standard Bank. So therefore, I have to add it back to my bank statement balance. Once a check is presented for payment by the party to whom the check has been made out to, what will that do to our bank statement balance? Now that check is physically going to be honored by the bank. So now it's going to reduce my Standard Bank balance. So therefore, I'm saying less outstanding checks now, 513.43. And that will bring us back to our balance as per the ledger, 11,863.52. There we've worked it out, 11,863.52. So it doesn't matter whether you start with a bank statement balance and work towards the ledger balance, or whether you start with a ledger balance and work towards the bank statement balance. It's exactly the same process. The only thing is my pluses become minuses and my minuses becomes pluses.